this ongoing series, we continue to build our total TFSA from 0 to 100K. This time around, we're going to pit a regular ETF against its covered call version, and then we're going to see where the total return falls. Hold on to your seatbelts, folks. This is going to be a good one. We are 8 months into the TFSA challenge with a total of $4,039.49 invested thus far. We are adding a base amount of $500 monthly, as well as any donations made to the channel via super chats, thanks, and stickers. Your support is, of course, always well appreciated. For this month, we are running a smaller challenge within the challenge itself. I have found a tech ETF that also has a covered call version, so I will be investing in both so that we can compare the ETF to its covered call twin and see how those total returns stack up.
Candace, who do you think will win?
As usual, another great question from our newer friend Hazel Nutterscotch. Covered calls love a little volatility in the market, so they love flat to sideways markets, and they also do well in slightly bullish markets. The reason for these market types is that the option writers can get higher premiums on the contracts. The tech sector is very bullish right now, and it is expected to continue as such. So for the covered call version of the tech ETF we are using in the challenge, we can expect to see capped gains, though we should also see higher premiums at the same time. The question will come down to, can the increased premiums cover the capped gains? Generally, the answer should be no. The regular ETF should outperform the covered call version. We're going to find out, though, as this challenge progresses. Who knows? Sometimes the market can surprise even our best guesses. For this mini challenge, we will look at total return. I will, of course, do some additional math to see what that total return will look like if we reinvest the dividends back into that covered call ETF. Join today's conversation. Let me know in the comments who you think is going to win, the covered call or the regular ETF. Thank you for your participation. If you love this sort of content, be sure to subscribe for more, and another huge thank you for that click. As this challenge progresses, so do we. Let's take a look and see how the stocks are doing. We will start by looking at our current lineup and any changes we made to them. We will start with Alvo Petro Energy with a ticker of ALV. We still hold 20 shares. They were our total last month, and we will have to see if they hold that dishonor once again. Their adjusted cost base comes in at $8.09, and we get a current price on them of $6.20. They have made back some ground, so this is good. When it comes to dividends, we have received $3.72 so far. Now, their return on investment, it does come in at negative 23.36%. Factor in those dividends, we do get a total return of negative 21.06%. They have a yield of 11.801%, and the next dividends from these guys are coming out around the middle of April. They are moving in the right direction, so let's keep that up. See if we can do better next month. Up next, we have Alimentation Couche-Tard with a ticker of ATD. We did add another share this time around, so that takes them up to 5 shares. Their adjusted cost base comes in at $77.19, and their current price comes in at $84.56. We have received 53 cents so far in dividends for them, so their return on investment, that comes in at 9.55%. Factor in those dividends, we get a total return of 9.69%. They do have a smaller dividend with a yield of 0.872%, and we are expecting some more dividends from these guys around the end of March. I am liking their growth so far, so I've got nothing to complain about. Our next stock is Brookfield Asset Management with a ticker of BAM. We did add one more, taking us up to 6 shares. Their adjusted cost base, that comes in at $46.64, and they have a current price of $54.30. So far, dividend-wise, we've received $3.01. Their return on investment, that comes in at 16.42%. Factor in the dividends, we do get a total return of 17.50%. That's not too shabby. Their yield comes in at 3.701%, and we got dividends coming out on March 28th. BAM had a steady month, and I am still a happy investor with this one for sure. Next, we have Scotiabank, ticker BNS, and we held steady at 7 shares. Their adjusted cost base, $61.67, and their current price is at $65.25. We did receive more dividends. We received another $7.42 in dividends, taking our total up to $10.60. Their return on investment, not bad, 5.81%. Total return after we factor in the dividends of 8.26%. Their yield, it's come down a little bit, 6.434%, and we are expecting some dividends from them on April 26th. They had a good earnings report, and our higher return is reflecting that. We added another 4 shares to the Purpose Bitcoin Yield ETF, ticker BTCY, for a total of 30 shares. Their adjusted cost base comes in at $4.83, current price $6.34. Bitcoin blew up, and so did their price. We received another $1.24 in dividends this month, taking our total dividends up to $2.33. Their return on investment comes in at 31.26%. Factor in those dividends, we get a total return of 32.87%. Their yield has come down a little bit, 8.143%, and we are expecting more dividends on March 7th. What can I say? Bitcoin turned this ETF into a superstar this month. Up next, we have Canadian Natural Resources with a ticker of CNQ, and they held steady at 3 shares. Their adjusted cost base comes in at $84.55, and their current price comes in at $89.99. So far, we have received $3.80 in dividends. So their return on investment, that comes in at 6.43%. Factor in the dividends, we get a total return of 7.93%. Their quarterly yield sitting at 4.47%, and we are expecting some dividends from these guys in early April. CNQ had a solid month, and that total return is moving back up, so it's going in the right direction. Tracking over to CNR, we held our position steady at 2 shares. Their adjusted cost base still the same, $151.74. Their price, though, they had a pretty good month. It went up to $176.60. So far, we have received $2.37 in dividends. Now, their return on investment coming in at 16.38%. We have a total return of 17.16%. Their yield comes in at 1.903%, and we are expecting more dividends from CNR on March 28th. They had a good month and a very nice looking total return. The next stock is Decisive Dividend Corporation with a ticker of DE. We did not add any this month, so we're still firm at 20 shares. Their adjusted cost base comes in at $8.40, and their price comes in at $11.31. Nice. They did receive an additional 80 cents in dividends, bringing their dividend total up to $3.80. Their return on investment comes in at 34.64%. Total return comes in at 36.90%. They have a nice moderate yield of 4.286%. We are getting more dividends from these guys on, well, March 15th. DE's Cinderella story continues with another fantastic month. These are GOAT numbers, but did they manage to unseat our current reigning GOAT? Up next is Canoe EIT, sitting steady at 30 shares. Their adjusted cost base still at $12.87. Their current price comes in at $13.28. We did receive another $3 in dividends, taking our dividends up to $9.60. Their return on investment comes in at 3.19%. Factor in all those dividends, we get a total return of 5.67%. Their yield's still pretty high, up there at 9.063%. And we got more dividends coming on March 15th. Canoe absolutely increased their returns a little more this month, which is always good to see. They're moving in the right direction. Fortis is up next with a ticker of FTS, and we did not add any more, so we are steady at 3 shares. Their adjusted cost base still at $54.84, so their current price down a little bit, $52.51. We have, though, received $1.18 in dividends. So their return on investment, that comes in at negative 4.25%. Factor in those dividends, we get a total return of negative 3.53%. Their yield sitting steady at 4.505%, and we do have dividends coming out, well, March 1st. Not the best month for Fortis, and we will have to hope to see much better next month. The next stock is Hammond Manufacturing with a ticker of HMMM.A, and we did add another 2 shares for a total of 20 shares. Their adjusted cost base comes in at $8.30, and their current price, $13.30. So far, we've received 18 cents in dividends. Now, they have a return on investment of 60.24%. Holy banana bread, that's even higher than last time. That total return up a tiny wee bit, 60.35%. Their yield, 0.457%. It is a semi-annual, so we are expecting dividends pretty darn soon. They haven't declared them yet, but they're due. It's been about 6 months. Hammond is ruling this challenge so far. But if Bitcoin keeps surging up, they may have a fight for the next month. Up next, we have Open Text with a ticker of OTEX. We added one more share and now sit at a total of 4. Their adjusted cost base comes in at $51.21. Their current price, that comes in at $52.61. It's still in the green, but they did have a rough month. We have received 68 cents in dividends from them thus far. Their return on investment, 2.73%, total return 3.07%. They currently have a yield of 2.536%. We are expecting more dividends coming out on March 20th. They did struggle in February and they lost a lot of ground. Let's hope we see a much better March. We did not add any more shares to PZZA, so we are sitting steady at 5 shares. They have an adjusted cost base of $14.69, and their price comes in at $14.26. We did receive 39 cents this month in dividends, bringing our total up to, well, 39. That return on investment comes in at negative 2.93%. Factor in those dividends, we get a total return of negative 2.40%. They've got a higher yield at 6.436%, and we are expecting more dividends on March 15th. They're not off to the best start, but I do have faith in this one long term. We did not add any more shares to RealCan, ticker REI.UN, so we are sitting steady at 5 shares. Their adjusted cost base comes in at $17.31, and their current price is coming in at $18.26. We did receive an additional 45 cents in dividends, bringing it up to 90 cents in total. Their return on investment, it comes in at 5.49%. Total return after we add in the dividends of 6.53%. They do have a nice yield at 5.908%, and we got more dividends coming March 8th. It's not a bad return thus far on RealCan. Up next, we have Stella Jones with a ticker of SJ. We held pat on this one at 4 shares. So their adjusted cost base still the same, $80.26. Their current price comes in at $81.83. Their dividends sit at 69 cents. We have a return on investment. It's in the positive of 1.96%. Total return of 2.17%. Now, they don't pay a lot when it does come to those dividends we mentioned earlier. They have a yield of 1.139%. But we do expect to see some more of those dividends at the end of March. As I said, they have moved into the green, and that is good to see. Next, we have Sir Royalty, ticker SRV.UN, and we're still sitting steady at 15 shares. Their adjusted cost base, $16.37. This month, we did receive $1.43 in dividends, taking the total up to $5.79. Their return on investment, it is down right now at negative 5.56%. Factor in those dividends, we get a total return of negative 3.20%. Their yield sits at 7.374%, and we are expecting some dividends at the end of February. Those are the stocks we already held. This month, we are adding 3 new positions. Our first new addition is Timber Creek Financial, ticker TF. We opened a position of 7 shares. Our initial adjusted cost base is $7.17. Now, since I bought these a little earlier in the month, their price has risen already up to $7.79. So we do have a return on investment of 8.65%, so that's not too shabby. They have a yield of 8.916%. It's a monthly dividend. We're getting some more dividends middle of March, March 15th. This is technically not a REIT, but it is a heavy real estate company and should benefit big time from the rate cuts in the second half of this year. Now, the remaining 2 are those 2 ETFs that will be doing the mini covered call versus regular ETF battle. First up, we have the regular ETF. I chose the Horizons NASDAQ 100 Index ETF for our regular ETF with a ticker of HXQ. I opened that position with 2 shares. So adjusted cost base, $66.82, and I bought these in the middle of the month as well, so they currently have a price of $69.28, so we've already got a return on investment of 3.68%. This one does not have a dividend, so this is pure growth. It is pretty cool that we already have a return on the books. Let's look at the covered call ETF, and it is QQCC for the Horizon NASDAQ's 100 covered call ETF. This ETF basically just holds HXQ and then writes covered calls on it. I opened the position with 12 shares, so we have an adjusted cost base of $11.39, and their current price is $11.64. So they do have a return on investment of 2.19% thus far. Now this one has a nice looking yield of 10.988%, and we are expecting dividends March 7th. Already the regular HXQ is off to a slight lead over QQCC. QQCC. It will be fun seeing how this unravels over the next few months. Let's take a quick look at all of them together so we can see how that portfolio is taking shape. We have increased the real total return on this portfolio up to 10.34%. That is not too shabby for a young portfolio. As usual, let's take a quick look at the portfolio's diversification. Using Blossom, we can get a nice diversification breakdown. I do try to limit each sector to a maximum of 20%, though I'm usually not worried if I go over a wee bit. Both the financial and industrials, they're both over my 20%, but they're not over by much, with a 22.9% and a 22.5%. Consumer cyclical looking good at 14%, energy 11.6%, materials 9.4%, technology creeping up to 8.9%. I expect that number to actually increase by next month. We got utilities at 4%, real estate at 2.4%, healthcare at 2.1%, and well, consumer staples 1.3%, and communications dead last 0.9%. They're probably going to be dead last for a while. Next month's stock buys will absolutely be taking these numbers into consideration. The second number over there in orange is the average across all Blossom users, so you can see how far I am off from some of those Blossom averages. It is time to look at the toad and the goat of the portfolio for last month. The infamous Toad Award for our worst performer of the month is once again going to Elvo Petro with a dismal return of negative 21.06%. They did improve, but there is still a long way to go. And now for the goat, and we have Hammond back in their familiar role as the greatest of all time. They came in with an unbeatable 60.35%, and I don't know if anyone has a chance next month, as this is going to be the one to beat. Maybe BTCY if Bitcoin decides to go crazy. So that is our update for this month. We'll be back here again next month to do it all over again. I sure am looking forward to buying the next batch. If you are interested in any of these stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on NVIDIA. Thank you for watching, and I will see you in the next video.